Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, James DiBiasio. Before we begin today's program, please, sharing is caring. Like it, subscribe, follow the newsletter. All of these things help bring more people to the program. Our guest today is Sandy Peng. Sandy has worked for a securities regulator. She has been CEO of a mobile gaming company. But for the past 5 years, she has been the founding partner of Fission Capital. Fission is investing in blockchain projects through equity and through tokens. We spoke about what's happening in this space, what's going to be relevant for people in traditional finance, how traditional finance is getting into blockchain and particularly DeFi. What is DeFi, why it should be important, and what are the prospects for many of these projects going forward? Are we in crazy boom times? Let's see what Sandy has to say. Sandy Peng, welcome to DigFin VOX. It's great to have you on the show.
Hi, thanks for having me. It's a pleasure to be here today.
Yes, and thanks for joining us from, I understand you're in quarantine.
I am indeed. This is my lovely quarantine hotel picture in the background.
Okay, great. Well, I'm sure you're keeping yourself busy, and there's so much going on in this space that how could you not be?
It's been an exciting time, and it's good to kind of quiet down and focus on the essentials and catch up on work.
Great. Look, you're the founding partner of Fission Capital. You invest both in equity and in token forms. Tell me a little bit about when do you invest in equity versus what you do with token investments, just to give us a sense kind of where blockchain investing is going right now.
That's a great question, James. Typically, as investors, we don't really pick what form of investment. So what we care about is the team and the product they're building and the direction they're going in. Sometimes when the company's clients are mostly institutions or other businesses, then it makes more sense for them to have a equity structure. And sometimes when it's more, degen or decentralized, then where their clients are individuals, then it makes more sense for them to issue a token. But sometimes we're seeing mixture of the two. So sometimes companies set up an equity entity that holds some tokens that eventually might do a like a SPAC or some kind of acquisition, and they might have a token aspect. So we're seeing more and more things in the middle, but it honestly depends on what the company is trying to do. We're agnostic as to which vehicle.
Okay. When you're investing as basically a venture capitalist, is investing in blockchain, if you're going the token route and you're going the project route, is it the same kind of structure as a venture capital fund in just a pure private equity format like you would traditionally see in the Valley or other places?
So I don't like to think of ourselves as venture capital, because venture capital implies that we are early in a project stage, which is sometimes true, and it implies we provide a certain amount of support for the team, which we do, but we tend to be we tend to do a lot. We tend to get really, really involved with the projects that we take positions in. Most of the time because we love the team and we really believe in them and we want to help out. And sometimes it's because by helping out, you actually get to kind of learn more about the sector, and it's good for you to make investment decisions. So I think of ourselves as kind of like it's halfway between an incubation company and a investment company. But again, like we're stage agnostic. Sometimes we get involved fairly later on.
What's the way that you've maybe, I don't know if you thought about it this way, but is there kind of like a plan in the projects that you take? You've invested in big exchanges like BC Group and Huobi, as well as a raft of token projects that are on the Fission Capital website. is there like a method to the madness? Do these fit in together some way, or are you just looking, you just happen to find a team that you really like, and it doesn't matter what the other investments are, you just go with these people because you like what they're doing?
We're definitely seeing that we're being forced to be more and more agile, and we try to pick the projects that we enjoy working on. So currently we have a two-pronged approach. So one of them is a kind of a mining strategy where we're mining the projects that we like, and it's a very like number-driven thesis. And
What does that mean in terms of a mining strategy? I don't quite understand.
Well, it means we have a team that's looking at the best returns for our token, like farming wise. So APY, we look at TBL, some of these key metrics, and we figure out what's the best way of allocating our capital. So that's one strategy. And then there's another strategy where we're trying to find long-term projects and projects that are important for the sector no matter what. And these are the projects that typically would have very little competition because they're trying to tackle a very difficult problem. So for example, we're spending a lot of time working on a Ethereum layer 2 project called Stroll. And that's a very difficult thing to tackle because it involves like very, very complex math. And it's a problem that the Ethereum community desperately needs. And even though there are some very strong competitors in the world, I think there's room for lots of different solutions. And in the layer 2 landscape, I think there's a lot of false claims. So I think whoever delivers like a very solid and safe solution and that can scale will really help the process of expanding the Ethereum network, which our house view is that Ethereum will eventually flip Bitcoin at some point, but it cannot do so without solving its scaling problem. Yeah. So that's one example of a project that we're working on. And there's a few others which are, I think, fundamentally important in moving the DeFi narrative forward.
Okay, I want to talk in a little more detail about some of those things, but before I do, I just want to kind of stay on, I guess, the way that you invest. You say you're not really a VC fund, but if I use that as a comparison or even an accelerator, there's going to be a timeline attached to that. There's a fixed period for the fund, if you like, or the investment period, and then there's an exit. What is it like with what you're doing? Because Fission Capital is only a few years old, the space is so new. Do you think in those kinds of timelines so you have a certain way to measure returns? And is there an exit strategy, or are you just kind of making it as you go and you figure these things out?
I think we're figuring things out and we're making it as we go. Like the times of raising a fund for 7 years and committing to a single strategy, I think those days are gone.
From your perspective, what are some of the key things that people who work at banks, asset managers, and so on, who are trying to get their head around everything, what do you think they should be paying attention to? What's going to be relevant for their industry over the next months or years?
So I think that's a very big question. Yeah. I think obviously anything in the banking sector is will be disrupted to some extent if they're not adding value to the same extent and velocity as some of the DeFi solutions. But that's not to say they will be replaced. I mean, it definitely makes sense for everyone to understand a little bit about what's happening in this world and participate in whichever way they see comfortable, because from where we're standing at, this wave is unstoppable, and it will basically solve a lot of the unsolved problems, because the financial service sector that we see in Hong Kong is very focused on high net worth, large companies, and even SMEs are not being sufficiently serviced. Like everyone knows how difficult it is for a small company to open a bank account. And that's just one of many problems. Whereas the really big families and the big corporations are very, very well serviced. And I think DeFi is about filling in the gap, like servicing those who are smaller than the SMEs in Hong Kong, like individuals who have investment needs, individuals who wants to have banking and financial services. I think that's already being filled by an array of DeFi applications.
What's the difference what does DeFi bring to the space that, let's say, outside of blockchain-based finance, we've got virtual banks that are also meant to be tackling these issues. You've got, personal finance apps, robo-advisors. There's a wealth of things that people can use to try to, whether they're small businesses or individuals, to better manage their finances and get commission-free service and so on. So, why do we need DeFi?
That's a great question, James. I think all of the examples you named just now, I would classify as like a Web 2.0 fintech companies, and they are definitely moving in the same direction as a lot of the DeFi projects. But what the major difference between a Web 3.0 financial, like fintech company like DeFi, and a Web 2.0 such as a robo-advisor or a central bank is that in the Web 3.0 sector, startups can be a lot smaller in their infrastructure. Not every company needs a accountant. Not every company needs a back office. And there's a lot of these things that need to exist for a fintech company to exist, no longer need to exist anymore. And also it's much easier for these DeFi companies to collaborate with each other so that they don't need to replicate a lot of the work. So when you see a large number of people working together and trying to fit in, it kind of becomes an amorphous, large organization, but it's not there to benefit any specific set of shareholders, but there is value accrued within each individual project, and they all contribute value to the wider network and ecosystem. So I think that's a conceptual difference that's sometimes a little bit difficult to wrap your head around. But I think the clearest explanation I've heard about Web3 and Web2 is that Web3 applications tend to be more agile and collaborative, and and you can stand on the shoulder of existing giants rather than having to assemble a team, start from scratch, and do the normal startup route.
Yeah. You did a little bit of time earlier in your career at the Securities Futures Commission in Hong Kong, so you're pretty familiar with regulation. Are we at a point where the DeFi world needs to think about regulation, or is it still at a stage where they just need to build the stuff, build the ideas, and then work out how to fit into, I guess, a regulated world?
There are two ways of going about, like basically in any like common law country, there are very clear rules about what cannot be done, and as long as DeFi are not like stepping on these core principles of consumer protection and investor protection, and it has the best interests of stakeholders in mind, I'm hoping that some of them will get a free pass. Essentially, a lot of the nature of what these DeFi projects are trying to do, they are financial in nature, and we are seeing some of the larger DeFi projects, once they've reached a certain scale of size, they're coming back to apply for financial licenses. So there are companies that apply for licenses first and then try and gain market share. But we're also seeing companies that will build a large global DeFi presence and then apply for banking license, and then apply for lending license or whatever is necessary for what they're trying to build. I think it's great that the regulators, especially in the US and in Hong Kong, is giving these innovative companies a lot of room to explore, and and I think that's a fantastic thing.
You're a backer of some of the exchanges that we mentioned earlier, BC Huobi. Those are centralized exchanges operating in the blockchain financial system. How well do they play with DeFi providers? Are these going to be quite distinct universes, or are they all in the same sandbox and are going to be sharing the toys?
That's again great question, James. I think not every company needs to compete in the same arena. Like I said, there are companies focusing on to C clients, and there are companies focusing on to B clients. And to B, to me, is also a massive opportunity where not enough innovation and not enough teams are tackling, because there's a very, very high barrier to entry. So BC Group, as you mentioned, is one of those companies, and they've amassed a fantastic team, and they've managed to solve some very, very complicated problems in the regulated world, which I think will take a newcomer or even like a large internet giant a couple of years to build if they were to start now. So that's a fantastic moat to have in this market, and that gives them a license to try and go after the 2B businesses. And as we're seeing all these institutions moving into and becoming more and more aware of the powers of the crypto sector, I think BC Group is well positioned to be the first entry point, to be the gateway to the whole, the magnificent universe that's being built in the blockchain world right now. But their business is very unique. They have insurance, they have custody, and they have SaaS solutions that will have the potential of reaching millions, if not billions, of users through their partnerships with major commercial banks. So again, there's the 2B businesses, which is very different in their DNA and structure, and then there's the 2C businesses, which we expect to kind of move their tech a little bit faster and innovate and respond to the market a little bit faster. But both are super fun markets to play in.
At the same time, we're seeing, I guess on the retail side, we're seeing some pretty crazy activity. Dogecoin, now it's Shiba coin, stuff that I mean, to my mind, is a little loose and a little crazy. What do we make of this? Are these? Is there something that we need to take seriously as something that's showing us a new way of doing business, or are these just kind of scams or meme things that don't have the developer behind them? They don't have really meaningful, use cases or utility, and they'll just at some point flame out.
So I was having conversation with some of our analysts today, and so we've personally shied away from all animal coins recently. I mean, by animal coins, I kind of don't mean any coin that's named after an animal, because there will be serious projects that decide to name themselves after animals, because animals have this is a kind of a consensus social phenomenon, and it's a great marketing play. So when Shiba was when Shiba coin was first launched, it launched within a crypto community, within a DAO. And it launched because as somebody's kind of thought experiment, and they airdropped a lot of the tokens to group members. And similarly with Doge, it started off as a community token, and that shows the power of a community token. When there's very little influence from the founder, when the power is released to a community, and community everyone works on their own, and and sells the project to their friends. And it's about, and this phenomenon shows us the power that a decentralized organization like a DAO can harness. And that's very interesting to us. Whether this will last, I think some animal coins will gain mindshare, like some of them have already done. I think it's been a kind of, it's become a conversation, and the newcomers in this round will all remember some animal coins more poignantly than, say, Litecoin, or maybe like DeFinity, or Filecoin. But whether any of these attempts at very complex technical problems, like how much contribution do they really make in the future, is still yet to be seen. So it's So I think it's very interesting, and perhaps we're a bit too out of it or not degen enough to understand or catch all the animal waves.
Are you saying we're too old, Sandy? Don't say that, please.
You're just fine, James.
You're younger than me, but at any rate.
I'm being called a traditional blockchain investor.
Oh no,
by my Doge holding friends.
Turn it around and just say you're OG. That's cooler.
Yeah, sure. So I'm too OG to understand animal coins, but I can definitely see the attraction.
Okay. All right. Let's go back to the Ethereum question. You were talking about some tokens that you're investing in there. This is a big deal for the community, I think. You talked about can Ethereum at some point overtake or flipping Bitcoin in terms of its market cap and its I guess its role in the crypto world. But Ethereum has had for years, ever since I've been writing about this stuff, the same problems around that transition it's trying to make from proof of work to proof of stake. This involves obviously scale. The gas prices on ETH are incredible. It's hundreds of dollars just to move something. Also, there's the environmental problem with proof of work, which I think is becoming too big to ignore for the Bitcoin world. So it's really important that Ethereum is able to to maybe make this switch. Maybe you can just explain a little bit about what's going on. What is the potential for the Ethereum protocol? Why this is important, and where do you see some of these other projects that you're investing in to help make this big shift?
Sure. A lot of blockchain protocols are already proof of stake. And we can see from those that, like you said, it doesn't have that mining proof of work problem, but it does have other problems. So, Ethereum won't be the first proof of stake projects. There are so many already. And the problem is that distribution becomes disproportionately concentrated in the hands of people with large assets or capital. So if I have more Ethereum, then I benefit disproportionately from the proof of stake ecosystem. Whereas a proof of work arguably is a fairer way of distributing token, and that's why I think it will always have a place. Like Bitcoin will and proof of work tokens will always have a place. That's why Chia and all these POW coins have been so popular recently. Because it does tend to like reach a much wider distribution. Whereas for proof of stake tokens, the founders have to do a lot of work in terms of either selling at private sale or or through Uniswap, Balancer, etc. And distributing it that way takes time, and the latecomers will have to pay a much higher price for token accrual, etc. But overall, I think it's going to have a positive impact on the Ethereum ecosystem. Most of all, hopefully, because it will help Ethereum scale. Whether Ethereum 2.0 will happen that quickly, I'm not so sure, but I'm hoping that these brilliant people working at it will sort it out soon.
Is it possible that other proof of stake networks, the likes, I guess, of like Solana or Polkadot or some of these other ones that are younger could end up taking that role instead, or is Ethereum still the real game in town?
So I think there are lots of really cool stuff being built on Solana, and Polkadot definitely has a very vibrant community and lots of supporters. And there's a new wave of developers who were previously part of like EOS or part of some other public chain that's joining the Polkadot ecosystem. And similarly with Solana. So there's a lot of market hype with both of them. But in terms of investment, I think it makes more like, we like things that have a higher degree of certainty. And to me, there is a possibility that Solana will become the the go-to network for DeFi apps, because it's so fast and it's got a lot of brilliant features. But right now, I think the risk reward doesn't justify a huge investment.
Okay.
But having said that, we're active. We've invested in a lot of Solana projects, and they've all done super well. So yeah, so we're very so we're observing very keenly how much TVL the Solana ecosystem can amass over the next couple of months.
Yeah. What will differentiate, in your view, when you're looking as an investor, what will differentiate those projects or those teams that will be around when at some point the bull market disappears and we might have another bust?
That's a great question. So we like founders who are very mission oriented. So there will always be lots of short-term opportunities, especially during a bull market. But we tend to pick founders who have a very a very niche expertise in a particular area, or their past experience gives them the right to win within a category that will be very difficult for somebody else to compete with them. So these are the founders that we like, and we tend to kind of back them, as well as like provide all of our resources to make sure to increase their chance of succeeding just that little bit.
Great. Sandy Peng, it's been a real pleasure speaking with you. Thanks for dialing in from your quarantine room, and look forward to good luck with your travels and your work, and look forward to being able to connect with you in the real world offline at some point in the near future.
Thank you, James. It's a pleasure being here.